Hello and good day to the daily lesson. The S&P 500 indices, Nasdaq, and Dow Jones on February 2nd. The S&P 500 index in the 4-hour time frame after a downward move, a liquidity, collected a sweep from the 6,848 level and finally closed within a rejection block. After that, it was accompanied by bullish momentum, closing above its previous candle. And this indicates a bullish bias in the market. If the momentum increases, the price could reach the rejection zone. The next block could move towards the 6,942 level, and if a sign of weakness appears in the bullish trend, we can look for a sell position targeting the 6,809 level in the market. However, if the price does not have enough momentum to move, it could move upwards, collect liquidity from the buy side above the fair value gap area at the 8,920 level, and then be accompanied by downward momentum, which could form a trade drive pattern. You can use this as confirmation to enter a buy position, placing your stop loss behind the rejection block area. You can see the price movement of the S&P 500, which, after a period of consolidation, moved downward, collected sell-side liquidity, and eventually reacted to a 1-hour unicorn zone. After breaking the 1-hour CICT, it moved upward and stopped at the FVG area. I expect that it may have a short-term correction to the downside, to the edge of a CISD zone or an order block area, and after that, it may continue its upward trend and enter a rejection block zone, which could, with increased momentum, collect the buy-side liquidity. At the 50 level, we might see a reaction at the rejection block, and we can also use this opportunity to enter a sell position, but only if the momentum in the market increases. With its upward movement, it can collect liquidity and after that enter a bearish phase. With the analysis of the 15-minute time frame of the symbol, in the S&P 500, we can see that the price moved downward during the Asian session. In the London session, liquidity on the sell side was collected from the low of the Asian session, and if we see another price push in the London session and it moves downward, it will be within the FVG range from level 6,870 to level 6,843. We can look for a trading strategy for a buy position within the market, where in the New York session, there should be an upward distribution move. However, if the price does not have a short-term downward correction and is accompanied by bullish momentum, it could be accompanied by a downward distribution move in the New York session. In the 4-hour time frame analysis of the Nasdaq symbol, we see the price moving downward. We can see that on the 1-hour chart, the change of character has been broken and the price has re-entered the rejection block zone. This can be considered as a swing failure pattern trading strategy, and by examining the RSI indicator, we see the price moving toward the high potential zone, which indicates the continuation of the trend. There is still uncertainty in the market. If the price moves upward and breaks through the FX zone from the 25,461 level to the upside, it can move up to the bearish order block zone at the 25,723 level, and if a sign of weakness is identified in the bullish trend, we could consider a sell position targeting the BPR zone at the 24,929 level. However, during hours when the price lacks enough momentum to move, it can have a short-term correction into the FVG zone down to the 25,473 level. And after that, it could continue its downward trend and form a 3 drives pattern for us. So if a sign of weakness is identified in the downtrend, we can look for a position within the BPR zone and enter the market. Additionally, a detailed trading strategy is provided within this specific section. If liquidity is accumulated towards the buy side, from above the rejection block zone, the price can move downward. If a sign of weakness is identified in the downtrend within that bullish order block zone, we can use a trading strategy with a limited target. With the 1-hour time frame analysis of the Nasdaq symbol, We can see that after liquidity is accumulated, the price, after reacting to a 1-hour order block zone, it has entered an FVG zone and is currently reacting to this zone, which is expected to... It is likely to have a short-term downward move, enter the FVG or order block zone, and move down to the 25,192 level. After that, it is expected to enter a bullish phase to collect the liquidity on the buy side, and move up to the 25,055 level, where the trendline liquidity is located. Being in this area, they can serve as suitable targets for attracting liquidity. However, if the market momentum increases and there is no correction, and it closes above the FVG zone at the 25,418 level, it can either move upward from this area with a break of structure or be accompanied by bearish momentum. And if it closes below the 25,828 level, it will be accompanied by bearish displacement and target lower prices. On the 15-minute time frame, the Nasdaq price movement during the Asian session, we can see that it hasn't been accompanied by a proper bearish displacement and has only been forming liquidity. In the London session, the sell-side liquidity at the low of the Asian session has been collected, and now it's pulling back to an FVG area at the 25,232 level, which from this area, it could get rejected and move upward. However, if the price moves upward during the London session and collects the buy-side liquidity, it could be accompanied by a bearish distribution in the New York session. But if the buy-side liquidity isn't collected in the London session and we see a pullback and correction in this same session, in the New York session, it could enter a bullish distribution phase. In the analysis of the 4-hour time frame of the Dow Jones Index, we see a downward price movement that included a liquidity sweep, reacted to the 50% level of the rejection block at the 48,462 level, and was accompanied by bullish momentum and bullish displacement. It is predicted that the price will move upward to collect liquidity, and eventually it could reach the 50% level of the rejection block at the 49,194 level or the edge of an FVG. It may react at this level, and after that, identify excess in the bullish trend. We can look for a trading strategy for a sell position in the market and use this opportunity to enter a trade. K. In the 1-hour time frame analysis of the Dow Jones Index, with the RSI indicator analysis, we can see that it had entered the oversold area and then was rejected from this zone and is moving upward, so the price could systematically gather the buy-side liquidity and proceed to penetrate the edge of the resistance zone, reach 61, and after that, with signs of weakness in the bullish trend, we can enter a sell position. Or, if the price fails to collect the liquidity and makes a correction downward, in the area of an order block or a BPR zone at the 48,637 level, we can look for a trading strategy for a buy position in the market, with the target being the rejection block area at the 49,075 level, based on the 15-minute time frame analysis. Dow Jones Futures. The price movement during the Asian session was a distribution move, and in the London session, it was a liquidity grab. It collected liquidity on the sell side, then reversed the move and formed a price curve, which could, during the London session liquidity grab, collect liquidity on the buy side, and it could have a bearish move, but only if it fails to collect liquidity during the London session. If it doesn't reach the buy side and moves downward, then, in the order block area or the key level at 48,573, we can look for a trading strategy for a buy position, with a target at the rejection block and the liquidity pool at the 49,200 level. Wishing you success and profits.